Is this the first time you've been to this event?
It is. Yes, it's exciting. It's my first trip to Oxford, too.
First trip to Oxford. Well, we're glad to have you. And you were speaking. Did you speak already?
I just finished, yes.
What's the topic?
Topic is the bright, optimistic future for community banking.
I love it. I love it. And so what's the message there?
The message is the incredible role that community banks play and have played for generations. Really, when you think about the community banking industry, it's a legacy of service to community. Obviously, a few headwinds facing the industry as we think about consolidation, the fact that everybody wants to be a bank these days, and how we move forward, how we navigate through these challenging times.
Yeah. So, Dean, how do you guys at the school work with Rebeca's organization?
Well, actually, I go to Washington, D.C. almost every year, and we connect with our legislators, both our folks from Mississippi and others that impact the banking industry. So Rebeca and the ABA and others help us shape some of the issues that we can talk to that group about. For example, the current legislation that's going through on the $10,000 checking.
Yeah. And you made some statements fairly strongly against that provision, I believe.
Yes. I mean, we really came out from early on leading an effort that has engaged and led to hundreds of thousands of individuals making their voice heard with their members of Congress against this proposal.
Seems like they've backed off on it. The latest draft of the budget reconciliation bill, the Build Back Better plan, as the president has termed it, does not include such provisions. But you know what I'm always concerned about in politics? That doesn't mean it's totally dead, as you know. It comes back again. If they're thinking about this, they're going to keep thinking about it.
Right, and until this deal is done, it's not done. And literally, it's 2 lines of legislation that would give the IRS this authority, which could be added at any point in the dark of night, and it would be done. So we're keeping the heat on. We're doing a lot to educate and make folks realize why this is such a bad idea.
Has the organization taken a position on the nominee for the comptroller? You guys have some official position on that?
Yes, we have noted significant concern with the nominee who essentially wants to end the banking system as we know it.
Yeah, I know. I mean, it would essentially end your industry.
Completely.
She's made no bones about it. That's
correct.
What her intention is. That's what her personal beliefs are. Her philosophy is that government should essentially take over the entire banking industry and should be the allocator of capital.
Right. And it's just so contrary, especially as as a former community banker myself, you look at the concept of capital and the ability of banks to gather and aggregate local capital and deploy that back in the form of loans. That is the purest, most efficient form of economic development possible.
No question.
Why would we look to disrupt that?
I guess the question I would ask is, what do they think is wrong with it? What are their concerns such that they believe, well, it's not working? Because assuming that this move, which is transformational, as they like to say, is not only transformational, it really kills one thing and gives rise to another. What's the deal? What's the problem? Is there a problem here?
It's a really good question, and I a lot of my job is trying to get into the minds of some of these folks so I can figure out how to best structure our arguments. But so much of this is driven by a need or a desire to solve for the underbanked or underserved aspects. And again, this drives me crazy, because why would we restrict access for capital from those that are banked in order to solve for what is a problem, but in relative proportions, we're creating a complete disbalance.
My concern, of course, Rebeca, is that we get to a point where financial decisions on loans, for example, are not made based on traditional best practices of is this just a good business decision? I'll just kind of describe it as that, where the recipient, in this case, the debtor, can take on that debt and pay it back, which is what's got to happen. Because if they can't, then the whole thing falls apart. And if you start pitching all the standards associated with determining the quality of a loan, We all get hurt on that.
We all do. And that's, again, the heart of, this concept of risk management
Sure.
within banking is the ability to make those decisions. And you put into that process ability to understand the local markets, that individual, the quality of the business plan, all things that a computer program or, a guidance coming out of D.C. cannot evaluate. And in doing so, those that are on the board or on the line that need the most help are those that would be thrown out of the system, and that cannot be the answer.
That is so true. And when you think about taking local community banks out of that equation and replacing that, backfilling that essentially with bureaucrats out of Washington, which is what the nominee wants to do, that's scary.
It is. It's horrifying.
Really scary. Mm-hmm. So the other thing that comes up, and I'll direct this to you, Dean, it's this faith, confidence, and certainty that I like to harp on. That's what drives investment and expansion and hiring. Right now, we have an environment where we don't know what's going to happen, and so there's this uncertainty and lack of understanding and lack of clarity on the future. How in the world do these banks operate? I know what it's like running a business under that environment. Banks are the same deal.
It is very difficult, and to Rebecca's point, we've seen the movie before in 2008 when you make loans to people who cannot pay them back.
Yes.
No one is better off under that scenario. It's a very difficult thing to have happen. So bankers are no different than other business people. They don't want to wade into a market if they don't think they can get paid back. And so what happens is, with the uncertainty, investment drops, or if you do invest, the price goes up, the interest rate goes up, and that puts a cap or limits investment. So it really creates economic problems, and for some reason the administration seems to think the laws of economics have been suspended. We get a $3.5 trillion spending bill that costs nothing, supposedly. And,
exactly.
And we get, we're awash in money, but yet it's not supposed to cause inflation. And it's transitory, whatever that means. But it creates a lot of problems for bankers. And if bankers aren't doing well in loaning money in the communities aren't going to do well.
No question about it.
Exactly.
Rebecca, there's a misconception, I think, by those who want to promulgate even more regulations and more demands of the banking industry. There's a misconception that banks and financial institutions are just awash in discriminatory practices, that they make these decisions not on the basis of the quality of the opportunity and the typical underwriting practices which have guided those decisions for years. There's nothing new about that. Is that happening in the community banks?
No. The way I like to address this is, again, as a community banker myself, if I or anybody on our team was discriminating against somebody, we would have been put out of business long ago because the community would not stand for that. You would not continue to grow your business. We're participants in the community. We're at the schools, we're in the Chamber of Commerce, we're in the Optimist Club. I mean, our intent, the reason our banks were founded in many cases, were to serve everyone in the community. That is how we are successful.
Yeah, and it's my experience in working with community banks. Their staffs are diverse, and they're not diverse because there was some sort of goal or some sort of quota that they adhered to make that happen. They did it because they were just the best people to work in those jobs, and it worked out that way, which is the way it should be. And so it's kind of hard to say that they would then be engaged in discriminatory practices.
Exactly. I mean, we do the right thing because it's the right thing to do.
It's the right thing to do, exactly. And so it just feels like that's always at the core of all these decisions that come out of Washington. It's a way to kind of impact outcomes based on that. I like to say it's based on what you are instead of who you are. And in the case of a bank that's considering loaning money to a prospect, they're really concerned about the quality of the project or the proposal or what the money is going to be loaned for. That's what they focus on. That's how they underwrite it.
Exactly.
And they request financial inputs to that degree, and they make decisions.
And those decisions, again, are in the best interest with a long-term vision.
Absolutely. Absolutely. So I hope that I'm glad to hear that it was a message of optimism, because I share that same degree of optimism, but we want to keep that going.
Yes.
And we just got to get through this kind of shaky period, and I think we will. We'll come out better.
Active engagement and speaking up is what it's all about.
I totally agree. We'll be right back. We got more on middays. We're coming at you from the Oxford Conference Center, the Banking Symposium, sponsored by Citizens Bank.